Welcome back to the deep dive. We are jumping straight into the future today, specifically 2026.
Hmm.
We want to figure out what is really going on with the UK housing market. The mission is simple. Experts are predicting this significant bottom-up recovery,
Right.
and we need to uncover what that actually means for you.
Exactly. And to do that, we've pulled together analysis from, well, all the major players. We're talking Zoopla, Rightmove, Nationwide,
All
Savills.
the big names.
They've all been forecasting the critical shifts in activity and prices and, affordability as we head into the new year.
Okay, so let's unpack this. If the momentum isn't coming from those, top-tier properties, what exactly is a bottom-up recovery? Why are we starting 2026 feeling, well, positive?
The core concept is actually quite straightforward. The recovery is going to favor the most affordable parts of the market.
Okay.
It means first-time buyers are set to be the real driving force, while the upper, more expensive end still faces some real resistance. The energy is flowing from the base of the pyramid, so to speak.
And the biggest lever here, surely, was that base rate cut in December. We saw it go from 4% down to 3.75%. I mean, how significant is a 0.25% cut for the market's psychology right now?
It's huge. It's more about sentiment than immediate affordability.
A signal.
It's a signal, yes.
Yeah.
It signals confidence, which is vital when you consider the sheer number of fixed-rate mortgages due to expire.
I just saw that number, 1.8 million.
1.8 million, according to UK Finance. That's not so much a ticking time bomb as it is a massive calendar event. It forces movement. And that little rate cut just encourages those movers.
So it sounds like we're looking at a year driven by volume, not necessarily by massive price hikes.
That's the key.
And Zuppala's prediction that 2 in 5 purchases will be first-time buyers. I mean, they're not just participating. They are the engine here.
They are the engine. But we have to look at this regionally, because affordability is creating a very clear north-south divide.
Right.
So while first-time buyers are driving sales volume, the data reminds us that London, for example, only saw about 1.3% growth last year. We're stabilizing the market for quantity, sure, but we're not fixing that structural inequality.
So the North, Scotland, Wales, they're expected to be the strongest performers.
That's the expectation, yes, along with Northern Ireland, which saw incredible growth last year.
Okay, so if stability is the goal, let's get into the numbers. What's the consensus from Halifax, Nationwide, Savills? What are they saying about price growth?
Well, the takeaway is pretty much unanimous. We're looking at uniform low single-digit growth.
So no crazy spikes.
No. Halifax and Nationwide put the range somewhere between 1% and 4%. Savills estimates average prices will go up by about 2%, which is around £7,200.
I see.
This low figure is probably the biggest insight. It confirms we're aiming for stability over speculation after 6 years of just, unprecedented volatility.
But a surge of demand, especially with new buyers rushing in, that has to introduce some risk, doesn't it? Beyond just pricing.
It does. And that's the quality check. The New Homes Quality Board has already put out a caution. They're saying this heightened demand can't come at the expense of build quality or customer care. And that is a really crucial point to remember as things ramp up.
So when we boil it all down, what does this all mean? The synthesis seems clear. 2026 is about more people moving. It's about stability, led by first-time buyers in the more affordable regions.
That's it. It's the year of moving, not maximizing equity.
Right. So that leaves us with one final thought. Given that the top end of the market, that high-value segment, is expected to stay price-sensitive and require pragmatism, what specific opportunities might that create? For a really well-informed buyer or seller who's operating in that less predictable space, something to think about until our next deep dive.